Good afternoon, ladies and gents. Thanks, Paul. Bit of a hard act to follow in terms of that wrap-up. Thanks, Paul. And despite the fact that I'm a West Coast Eagles supporter, it's great to be here to present the start of Gather Round. Yeah, as Paul said, you know, we're really excited about the opportunities we've got here, and to have secured two brownfields gold projects located just outside of Kalgoorlie. With ex-production assets, with well-established mineralised systems. So for us, it's not a question of how if we can find gold in these projects, it's how much we can find at a what grade and getting them into production as quickly as possible. We're fortunate that both of our projects are on granted mining licences, which is a huge benefit to getting any projects in Australia these days through the increased regulatory regime into production. Our first of our projects at Coogee, which is located about 50 k's southeast of Cal, we've already conducted our first drilling program, which we produced high-grade results earlier this year. Secondly, the Eureka project, which we acquired... Sorry, guys, just might need to be a bit quiet. The Eureka project, which we acquired late last year off Delta Lithium, which we're literally about to bounce the ball down in the next couple of days. Just had it confirmed. We've got our first drilling program commencing over the weekend. And as well as from an exploration perspective and the upside at Eureka, we've also got a near-term production opportunity there as well. In terms of my involvement in the company, I was a shareholder for about 4 years, and then 12 months ago we launched a restructure and recapitalisation of the company off the Coogee project. Both projects have got nearly a combined 240,000 ounces of resources in place currently, and we know that drilling has intersected significant mineralisation outside of both those resources, which we're following up in these current drilling programs. We've completed the heritage survey just recently out at Eureka, which paves the way for us to actually commence our maiden drilling program out at Eureka, which will be following up some pretty significant high-grade intercepts from historical drilling, including 4 metres at 134, 3 metres at 48, and 4 metres at 32 grams a tonne. So on the first. And that's at Eureka. At Coogee, we actually delivered some really strong results, both under the historical pit and step-out drilling to the north, which we'll be following up in the third quarter. We've got our work programs that commenced out at Eureka for a near-term production opportunity, which I'll run you through. And we have therefore a clear strategy of creating shareholder value both through the drill bit in terms of defining more resources outside of the existing resources, targeting these high-grade lodes, and also a near-term production opportunity and cash flow. We're a market cap of only $18 million, so we're highly leveraged for success. Capital structure and overview of the company. So we're a market cap of 18 million. We had about $2.6 million in the bank in December. That'll be just under $2 million following the Coogee drilling program at 31 March. And the board's made up of myself. I've corporate finance and capital markets background, but been involved in the mining industry for over 25 years. Complemented by Andrew Rich. Andrew is an executive director at Bright Star Resources. Andrew has been is a very well-known mining engineer and operator of underground mines in WA. He's run them for Westgold, Ramelius, and others, and more recently Linden Gold, that was acquired by Bright Star, and is now running some of their operations. Pedro Castellorius, he's a geologist, very well experienced, and Peter Guilford's joined the board just recently. He's the CFO of Delta Lithium and joined us through the acquisition of Eureka. Okay, so the Eureka Gold Project is located just 50 kilometres directly or northwest of Kalgoorlie, just up the bitumen, and 20 kilometres north of the Paddington Mill. It's on 4 granted mining licences. And we acquired this project in December last year off Delta for $3 million, which was negotiated in the middle of last year. So it was in today's current gold price environment and where the outlook for gold is, and especially Aussie dollar gold, we acquired this at a fantastic price for the company and shareholders. We've just completed our heritage survey out here at Eureka, paving the way for us to commence drilling, as I said, which will happen in the next couple of days. And the focus of this drilling is going to be in and around the pit to define potentially some more resources. There's 112,000 ounces currently in terms of our existing resource. 62,000 of that is indicated. Outside of the pit, we're going to be stepping to the north and northwest, targeting these high-grade intercepts that from historical drilling, including 4 metres at 134 and 3 metres at 48, which were drilled by Delta back in 2021. But at that stage of the cycle, it really got no traction from the market, but needless to say, if we were to follow up those sort of results from this upcoming drilling program, it would deliver a lot different result, which is the other focus of our upcoming program. It's mined over 32,000 ounces historically with really good recoveries. That's a recent photo of the Eureka pit. It's in good condition. That's looking sort of south-southeast. And the bottom of the pit there in the sunshine is basically where the focus of our near-term production opportunity sits, where where the majority of the 62,000 ounces of indicated resource is located. We can see from this section here that there's to the left-hand end, which is the southern end of the pit. That's where that majority of that resource sits. Because we're on granted mining licences, it's a process from woe to go of approximately 12 months to potentially have this open pit with a cutback back into operation. And as I said, the majority of the 62,000 ounces sits to the left-hand end of the pit there, which is down to about 150 metres, and drilling and then sort of the ore body remains open at depth and along strike to the north. In terms of the work programs that we've already undertaken, a recent pit optimisation is showing us off a 4,500 Aussie dollar gold price. There's 35,000 ounces of recoverable gold sitting in that indicated resource, which is obviously at a near 5,000 Aussie gold price today. That's a lot of gold in situ value for a 20 million market cap company. So that's why we're focusing our company and strategy in the near term in the next 12 months on both exploration upside, adding to those resources, and near-term production potential and cash flow opportunity. Here, this plan view shows the historical drilling around Eureka and to the north. A lot of that drilling is to the north of the pit, is sort of down to 50 to 100 metres max. A lot of air core and some RC. The pink dots show the planned drilling of this upcoming program, which we can see just to about 100 metres north of the pit is where we've had the 4 metres at 32 and a couple of other intercepts in that area, which we're looking to define a separate lode there. And then up to the northwest where the high-grade intercepts from the Delta program were drilled but were never followed up because of that gold price environment. And at that point in time, Delta, it was Red Dirt at the time, they then pivoted within a few months to acquire the project that they then turned into becoming the lithium company that they are today. Okay, the Coogee project. So Coogee, again, is covered by a mining lease with adjacent ELs. Ramelius mined this project back in 2013-14, and obviously at pretty high grade, so to recover over 20,000 ounces of gold. We've got an updated resource for over 126,000 ounces. Most of that sits underneath the pit and then further to the north. And we know that there's about 15,000 ounces at the bottom of the pit today. It's located close to Lake Lefroy, hence all the water in the pit, which can be, obviously from a dewatering program, we can get that back into operation upon completion of more drilling and defining more resources underneath the pit. Our recent drilling program delivered directly underneath the pit a really nice intercept of 10 metres at 4.5 grams, and then further to the north, above 10 grams, and good copper as well. You can see here from this map that the intercepts we got and generated to the north of the pit delivered some really strong results: 5 metres at 14 and 3 metres at over 2% copper, and 7 metres at over 6% gold. This mineralisation are in sort of high-grade plunging lodes. So the opportunity here is, and our strategy is, to further define those lodes and target in on them, as well as the potential mining opportunity directly underneath the pit. Here's an overview of the resource, and as I've sort of outlined, you can see the resource sitting below the existing pit there, and also the vast bulk of the mineralisation to the north, which has got a contained copper metal of over 4,000 tonnes in to the north of the pit as part of that ore body. And we are looking at that as a potential separate VMS system to what exists in and around the Coogee pit. The mineralisation remains both open down dip and to the north, and extends for over 1.2 k's. So there's lots more work there for us to do in and around the Coogee pit, and also we have 5 exploration licences, and in Coogee West there's a very large mag anomaly sitting there which has never been drill tested. There's also some rather significant geophysical anomalies that run for 1.5 to 2 kilometres that have only had very shallow drilling down to 25 to 50 metres historically, that we will be following up as part of our exploration strategy at Coogee in the second half of the year. So in terms of the investment proposition for Javelin and what we offer to investors, it's exposure to brownfields gold exploration and near-term production opportunities on granted mining leases. We're coming off a market cap of $18 million. We're starting drilling at Eureka in April, which is this weekend, in the middle of April, which means through from mid-April we'll be drilling for 3 weeks with results to come mid-late May, early June. So we're going to have lots of news, lots of activity. We're going to be focusing obviously with the Eureka drilling program in and around the pit, and also those high-grade lodes to the north. And then our early stage production opportunity to produce cash flow at Eureka, led by Andy Rich and myself, is what we're also going to be pushing ahead with in parallel, with the aim to have that 35,000 ounces of recoverable ounces in production in approximately 12 months' time. And with the availability of processing plant availability in and around the region, and obviously Paddington's only 20 kilometres south of Eureka, and we know that it's got some gaps in its production schedule over the next 1 to 3 years. We think that's a very good opportunity for us to turn that into cash flow. Thank you very much for the opportunity, and I'll be at the booth if you'd like to come and ask any questions.